everybody. Welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton. I apologize I have no camera up today, but I am running way behind, so I didn't turn on the lights here in the studio and get everything set up. I thought it would be a better idea if I just went ahead and started the recording. Now, I think we've got everything kind of lined up here correctly, so let's just go ahead and start taking a look around the market. I'm looking at gold here right now. We'll just start off there. That seems as good a place as any to start today. And as you can see out here on the daily chart, we have come right back down into about $1,083. This is right against the previous cycle lows. Now, I have been talking to you guys for a while, and I'm going to go out to a monthly chart here so we can look at it even a little bit more. But I have been looking at this area from about $1,200 an ounce to about $1,000 an ounce. And let me explain to you why we're looking at that area for gold. And I'm going to talk to you a little bit about maybe a longer-term position or an investment position. So this is less of a trading position and more of a a longer-term position. So let's go from about $1,200 down to about $1,000 an ounce. Now, I'll admit this is a pretty wide zone, but I want to show you why I'm looking at these areas. Now, for your just so that you know, I have started buying gold. I started buying at right around $1,200 an ounce, and I bought again at $1,100 an ounce, and I have been kind of sitting around waiting to see what gold was going to do, and if we go lower, I will probably acquire a little bit more. Now, I am acquiring hard asset gold. I am not acquiring paper gold. So that may have if that has any effect on your decision making, that's just what I'm doing. So in full disclosure, that's what I've got. But let me go ahead and ID a couple of things for you. So one of the things that I always say is look left, structure leaves clues. So you have to ignore kind of the downward momentum that we've had here and remember back to around this $1,200 range when I first started talking about buying gold. Well, if you look left, I want to identify a couple of things. Here's a previous structure resistance point. Here's a previous support point. If we go back a little bit further, you have your next resistance point right around here, and then another support point here. So if we're looking at long-term, where we're likely going to find support after the pullback from way back when we were running at $1,900 an ounce for gold, the very first spot that we possibly had was this resistance level around $1,200 an ounce. And you'll see as we pulled into that area, look at what happened. We had a support. We had support again, we had support again, and then finally we broke through that down into the previous support level. Now, what did we find along that support level? Well, we had a nice bounce from the base of that support level back up into previous structure support, which should become resistance when in fact it did, followed by a press back down into this previous support level. Now, if we get just a little bit lower than that, boom, what do we run into? Well, we run into this rather significant resistance level right around $1,000 an ounce. This is where, during the run-up, we saw our first significant pullback, really, since $230 an ounce. From there, boom, $1,000 an ounce, then it kicked back down to about $720 an ounce, and then rallied on, broke up into new structure highs. So certainly that $1,000 an ounce level should be a pretty significant support level for gold. So if we end up coming down just a little bit farther to around $1,000 an ounce, that's also going to be a pretty decent place to look to buy. But you can understand now by looking at this just why it was important to have such a wide berth, because we have in here resistance, support, resistance levels all coming in between that $1,200 and $1,000 range, between the two, basically a $200 or a 20% area here. Now, if we get below $1,000 an ounce, I think there's a pretty good chance we go to $700. So you wouldn't see me acquiring at, say, $900 and $800. I would acquire at $1,000, and then if we came back down in and retested at $700 or $750, then I might look at picking up a little bit more. Understanding that this is a wealth, that gold is a wealth protector, and what I'm trying to do is take a portion of my assets into hard metals and protect them against things like inflation and things like devaluation of currencies and some of those other reasons that we get into hard asset metals. but I would not be in a position where I would be trying to buy up 800s because there's nothing here to suggest. I wouldn't be averaging in, I guess, at 800. I'd be waiting until we got a little bit deeper. I wouldn't be buying anything at 900. So we're right in the range where I think we're in a pretty good buy area long-term for gold. So that's just a little look at gold I thought would be nice here as we go into next week. Now, let's just cycle through. Most of the stuff that I do in the war room is on the hourly time frame, but I know most of you who watch this video, well, an hourly time frame, well, by the time Monday rolls around, things may have radically changed. That's why I have war room. So every day you can kind of come in with me and check out what I'm doing that day. And I can generally find trades that will play themselves out on an hourly time frame within that day. So all the trades are typically placed in the morning before 7 o'clock. At 7:30, we come in, we talk about the trades that I took and why I took them. And Akil is also taking pattern trades in there. And then we wait for the day and see how those trades play out. And it works pretty well. We've been, I think, 60% up about 60% this year on our trading. And the idea, of course, is that you guys get to look over our shoulder and see what we're doing every day. So we just had a really nice, and again, this is why it's so important that you guys learn how to read structure, is you need to understand what's going on. So we had, in this case, a move down. We got this rally up. We get this nice little retest, followed by a breakdown to retest the lows. Then we get a giant break up. We violate the highs here. Then when we pull back, look where we pull back to. Look left. I always say it. Look left. Structure leaves clues. Where'd we pull back to? Look left. There it is. Pound Swissy, there was your buying opportunity right down into those lows. We just barely tapped it, and then we rocketed back off, and you had a chance to pull off your profits at around 152.81s for the initial target. And again, we may run all the way up into 153.84s. But once we get up there, once we get up into this zone, we want to be very cautious about holding beyond that. Why? Because those are the most recent highs. And if we look left, we've got just a shelf of stuff that we've got to concern ourselves with. So look at all of the potential areas once we violate that level where we may have issues. So what we want to do is, if I'm going to do this right, and I want to buy this, and I'm buying it up at the previous lows, I'm coming off with my initial targets here at 153.79s. At that point, I'm either looking for a way to get short to come back the other direction if the market provides me that opportunity within my rule set, or I'm going to wait for a total violation of the highest higher at 155.21s. I am not going to try and buy and sell and short and get long inside of this nasty little mess we've got at this most recent structure set of structure levels. I'm going to wait for a clear violation of that and then look for a buy as we return back down into that range again. So those are some of the things. And if you don't understand structure and you don't look left and you don't take the time to really learn how to do this, then those are the type of problems that you're constantly running into, is that you don't really know what's going on. You're guessing, you're frustrated, you're confused. It doesn't make any sense to you. It's what I call trading in the gray. It's that place between black and white where nothing really makes sense and it all is confusing, and it's like you're viewing the market through a prism and nothing makes sense. And what we try and do, or what I try and do, is just simply clear away the fog to help the gray become more black and white, to create a more distinct line between when we act and when we don't act. And the very first step of that, folks, is learning structure. And so anyway, let's cycle through a couple of these other things. I don't want to keep you here all day. I know you guys are anxious to get this video out. We've got a potential structure level coming up here, although it won't be one we'll take because the risk-reward won't be good enough. That's some stuff we're working on a lower time frame chart. Let me see what we've got here. You're going to have a 127 extension right here, right at structure. Okay, so you've had the pullback. We're looking for potentially an AB equals CD move here. So if I go ahead and just clone this sucker, and then we grab it and drag it here, what you're going to see is this 127 extension. Between the 127 and the 1414, we're going to have an AB equals CD move back up into previous structure resistance, okay? Now, ABCD moves are not always perfect, but pretty decent spot here to maybe be looking for a shorting opportunity. You also have a potential pattern formation here. Let me just check the ratios because the second one doesn't look very good. Yeah, we're going to be short, I think, on the second one. Let me see here. Yeah, we don't quite hit it. So we don't have a pattern formation here, but we have possible one-to-one measured move back up into structure resistance around 134.18s. So look for the market to go into an overbought condition at the 127 extension against previous structure resistance and look for an opportunity to sell back down into previous structure. Aussie yen here, nothing. I'm going to breeze through these here pretty quick. This is something that we're dealing with on a lower time frame. We're just a little into the money on it. That's been a lot. New Zealand trade's been a little bit bigger headache than I was hoping for. We basically had a 26.18 trade here that's double bottomed. We've been flirting around with this previous structure level that we identified right where we bought at. And we really were looking for this thing to shoot back up for a little bit of dollar weakness, and we just haven't had it yet. But the nice thing is New Zealand has proven to be a pretty nice support, and the dollar hasn't been able to make any new structure lows. So we got that going for us. Back out on the daily chart, euro yen, euro dollar, something else in here I was going to show you guys before we left. If I can get it to go. This is a potential 26.18 trade here. So we had the initial top. We retested the high there. We broke structure to the downside. If we can get a retracement back up into the 618, we got a potential opportunity to sell, looking for the market to continue in the direction of its trend. And then euro USD. This week, we ran right back up against previous structure support, and the market pulled back down off of that. We do not have any shorting opportunities here, but I wouldn't be surprised here. Well, I don't know. Yeah, it could go either way. I mean, if we get a rally, we could easily see a rally back up into 111s. Not that hard to, I mean, that's really not that big of a deal. Or we could see a press back down here to structure around 105.56s. So, I mean, we're in kind of limbo land here on euro, and this is one we want to leave alone until we at least get a rally or a bounce down into this structure support level that maybe we could buy up. So right now, euro is a hold. But I hope that gives you a little bit of an insight into some of the discussion that some of the stuff that we do on a daily basis and some of the things to watch out for into next week. And if you want to, you can go over to tradeempowered.com. We've got a host of training. If you were looking at that structure lesson and thinking, man, I'd really like to learn a little bit more about structure, well, head on over to Trade Empowered and sign up for Into the Gray. Into the Gray is a fantastic place for you to start. And if you want to know a little bit about the 26.18 trade, I also have a free training on that. Lots of free stuff for you guys who are willing to sit and learn. And then understand that's the free stuff. That's the stuff that I think is so basic and so generic and so fundamental that I shouldn't even be charging money for it. And once you go through that, I want you to ask yourself a question. You just ask a question. You just ask yourself the question, man, holy crap, if this is the stuff that he gives away for free, what else am I missing? Because there is a whole world that nobody ever even touches on. And that's what we try and do, is we try and show you the path. This is how you get started. And once you get to a point where you know enough of the basics that we can actually really talk to you about trading, then we have training courses and stuff for you to get involved with. But if you don't know the basics, it's not even worth talking to you about that. That's why I put out all the free training that I do. So head on over to Trade Empowered and make sure you sign up for all that stuff. And then I will be gone next week, because I have Thanksgiving break, and we've got really one more good week of trading, and then it's all going to be junk until probably December 1. So, and then be on the lookout for a new program from me starting next year. I want to start something with you guys in January and take you guys through a whole year together. And so I am going to be personally stepping in and running a program for some of you who are interested in doing that. And it will be designed to take you through kind of the same way the War Room is, but it's kind of like War Room Plus. And I've got a catchy name for it that I'm not going to reveal just yet. But for those of you who are looking to really come alongside me and work, on a weekly basis with me into next year, that's coming. So if you want details on that, please make sure that you've signed up at jasonstapleton.com so that you're on the email list. Or sorry, not jasonstapleton.com, but tradeempowered.com so that you're on the email list. So go to tradeempowered.com, sign up, and then start learning about some of the stuff that we talk about around here. And if you do all that, I'll see you in a couple of weeks. Until then, good luck, good trading. Talk to you then.